Good morning, ladies and gentlemen, everybody. Sorry for the little moment of silence. We'll get started here in just a sec. Alrighty, yeah, sorry about that. Was just pretty much getting a email sent out. But yeah, essentially, stock market in a selling program, in a sell signal, obviously, and right now we're just bouncing the market. The market is oversold into some arguable counter trend support areas, but again, it's semi-dangerous because again we are taking the markets long right now while being in a bigger downtrend, if you will. So one of those things where you just got to be mindful of that. All right. Sorry, finishing up this email and then yeah, we'll kind of get started a little more. Not that anyone's even in here, but you know. Okay, good stuff. Sorry, finally got all situated there. Yeah, so again, pretty much we are just looking to bounce the market, pretty much right there, right now. We're already bouncing it a little bit, but yeah. So this is a counter trade setup. This is something that we see from time to time. To put it simply, well, kind of. One second. To hopefully make this somewhat simple for some of you guys. Again, it's simply we're taking the volume weighted average price of this low, and we know that just yesterday that volume weighted average price from the last low here just broke down, and now that it's broken down through its volume weighted average price, it is sold to its lower distribution, which is right where the arrow is. When markets do that, a lot of times they can have a little bit of a counter bounce to them. So generally, when we see a situation like this, we're not actually bearish the market at these prices. We're usually counter long bias trading, or trying to counter long bias trade the market back on the long side. Essentially, when we hit down towards that green price point. All right, so if we go look at this right now, again, you will see the market is traded down into that lower distribution area and a little below, and now we started to bounce. So you can see it hasn't worked as a perfect pinpoint support, but ultimately, when the market trades down into, we are not bearish at. We are optimistic of a little bounce. So this is just one of those situations where currently the market is in fact in a bearish sell signal and a sell program, and the market is in fact in a bearish selling operation, but we're at the bottom, well, arguably the bottom of a swing leg to the downside, which means we're more likely to kind of hesitate, pause, maybe even do a little bit of a counter bounce down here. So we're not as optimistic of, you know, entering short the markets here. That's not what we're looking to do. We're looking to, in the short term, arguably be a little hesitant on the short and counter long until we see a new lower high reset. We would rather not be chasing the short move into that low. What's going on, Easy? Welcome back, brother. Yep, so cheers to you. Again, Mark, well, for you, Easy, once again, you're the only one here. If you're not first, you're last. Yeah, we're essentially doing a counter bounce on the market right now. It's, yeah, that's pretty much it. Market's in a sell signal. We've oversold down into some arguably oversold levels, so we just kind of gone through a little bit of a counter bounce. Still kind of sketchy because, again, we're in a sell move, but generally speaking, we don't look to be super bearish on the low of this leg here because that's coming into some arguable support. So for the time being, I'm kind of optimistic that this market's not going to sell off too much harder from this low point, and we're actually going to kind of hesitate and maybe even do a counter bounce down here. But yeah, I mean, ultimately the market is in fact bearish because we're in a sell signal, obviously. Which the sell signal only started yesterday, but regardless, we have sold down into oversold lower distribution levels. A lot of times works as a counterbalance kind of support holding area. So this is basically going to go with that narrative until proven wrong for the moment. So cheers. Actually, let me double check something else too. Yeah, I say the volume weighted average price of the 30-minute is all the way back up here, so that for the moment will be the arguably, well, that's just going to be our counter, yeah, basically our counter bounce target for the time being. So yeah, so we'll be looking up as far as there, pre-market. Nah, well, I guess it depends on how you're reading it. Yeah, it kind of started 2 days ago. Well, no, I guess it kind of did. Yeah, I mean, I would say more of the confirmation would be yesterday because sell move started on this day, and then, yeah, actually, realistically, it is because, you know, probably the better way of reading that is, again, this is the sell move down, and that, well, yeah, and then, well, maybe not. Maybe, well, either way, the SMA yesterday was where I just drew that line. So, anyways, sell move started, then it bounced back up, and then yesterday the market was actually above, which arguably would just really be the back test and then confirmation down. But then the actual start point would be yesterday right there when the market re-broke below the SMA. Back test down. So, yeah. Yep, so that's pretty much that. Interesting. So we did sell down to that level there. So that's already complete. All right. What was yesterday's bounce from? I'm assuming you're probably thinking like, yesterday's low a day. Yeah, I mean, I guess if you're referring to yesterday's low a day, I mean, one thing I'm seeing here would be the lower distribution of the SPX chart, which again would have had 6,623 as a support over under there. Yeah, there could have been some other stuff too. I think we was it the 1 hour trend? I don't know. There's a lot of stuff we were looking at yesterday down into there. Oh yeah, the daily 10 SMA. So if you go to the daily chart on the SPY 2, you'll see we ran right into the daily 10 simple moving average. So, you know, arguably that, right? If you look here, there's a daily 10 simple moving average, read the price of 660.04. So that could have argued, well, not arguably, that was definitely a part of yesterday's kind of bounce action for sure. What little, is there any cool penny stock? Well, that's the thing. Penny stocks are going to be probably kind of bleak today because, well, the market's in a sell program. When that's the case, penny stocks and just stocks in general usually don't trade as good. So I'm just going to kind of flip through some of these guys real quick. Nope. OFAL. That was the stock that I looked at last night. That's it's debatable. Lux, quick pop and drop, done for. Nothing good. Market still has quite a bit of weakness. Well, just not want to say quite a bit of weakness, just doesn't have enough strength to really run a big bounce for the moment. So we'll see. Again, this is, I don't want to call it like a B setup or a C setup, but it's just, you know, we're trying to be, you know, essentially long bias, a little bottom in a selling operation, which is, you know, going against the trend. But then again, I've seen enough bounces in this area to know that being bearish here does come with some risk. IMRX trash. Well, maybe not. EVAX, that popped up pretty decent today, but that's kind of trash. This one. Interesting. Anyways, welcome back, everybody. Welcome back. Okay. BYND, not sure, have no idea. We'll take a little peeksy here in a sec. I mean, I guess, well, breakout might be another story, but BYND. I mean, BYND's been in an uptrend. Whether or not it breaks out, I guess, is another story. You know, breakouts pretty much any sort of, yeah, I mean, like breakouts and, like, for example, let's like think of penny stocks, really, all the times they spike up and stuff. Those are buy programs. It's all done by computers, not retail, or just your average market participant. So if you're like, you know, is BYND going to break out? I mean, your guess is as good as mine. You're going to need a computerized program to send off a buy algorithm on it to blow the stock up. But as far as a stock currently being in an uptrend and appreciating in price, it is. The uptrend started back around $2.40. So, you know, it's up to $2.91 now. Yeah, I don't know if it's going to break out. I don't really think like that, I guess. But yeah, it is uptrending, so there's that. I mean, I guess maybe, I mean, if you're going to talk terms of breakout, I mean, you'd have to be over $3.58 in general, because that's the weekly chart. So if you're going to start a, you know, if you're going to go up and appreciate in price for a decent amount, you'd need to start a longer term uptrend as well, and that would be the weekly, and that's currently priced around, I think, $3.58. Oh yeah, by the way. Oh yeah, I know you don't see the chart I'm talking about. Yeah, that last one. Because, again, there's really not a whole lot to talk about. It's just, yeah, I mean, stock's in an uptrend. If it goes over 358, maybe you'll start a weekly uptrend. Yeah, as far as Bitcoin goes, Bitcoin did end up shying the T1, T2 target, which had been announced over the past, you know, kind of couple days. We'd think we would go up to T1, T2. But anyways, yeah, so Bitcoin pretty much got the counter long target, kind of shied it by a little bit, and then our current kind of selling destination is 110,750. So, arguably, we're going to see Bitcoin try to, well, yeah, we're not going to see Bitcoin break down 110,700 probably for the moment. We're probably going to see kind of bouncing and stuff like this, maybe even a bigger bounce too, because we're coming into a weekly volume weighted average price down here, so that's a relatively good level. So this is a weekly VWAP over under, which basically means as long as you're above that, you can use it as kind of a support area. If you start to go under it, then we won't. But ultimately, for the time being, Bitcoin is pretty much completing one of the sell moves that we're liking. I haven't really come up with any further downside targets for the time being. The only sell targets and kind of destinations we were looking for when Bitcoin pretty much got into this high was to bring the market down to here, then to here, and then to where we're at now. So we've completed all three of those swing legs to the downside. And I just really haven't spent any time thinking about, well, if we continue to go down past the current selling destinations we were looking for, then what would be next? So probably going to have to spend a little time looking at Bitcoin a little further as it relates to that. Yeah, so anyways, for the 10 of you guys that are watching, again, just remember that the market is in a selling program. If you guys were in our stream yesterday, obviously you'd be up to speed in the sense that we had mentioned, do not be long bias, you're only bearish. We're entering a bearish market. The selling programs and the algorithms are flipping to sell programs. So again, as far as, you know, short-term trading goes, again, realistically, you could be long on bounces and things like that, but the macro environment of the stock market is bearish now. We're not bullish. We haven't been bullish for 3 days now, obviously. So So yeah, that's pretty much that. So again, if you tune into our streams each day, generally speaking, we will keep you on the right side of the market pretty much 95% of the time. And that is simply because we just listen to what the market says, and that's it. We don't make assumptions. Well, it's not entirely true, but again, we just follow the SMA system. It tells us when the market's bearish. It tells us when the market's bullish. We don't fight that. That's what I mean. We don't fight the system, if you will. Even though I'm actually kind of fighting the system this morning because I kind of want to see a bounce, even though we're in a bearish market. But that's for other reasons. So yeah. Again, not. I mean, there's not a ton to say. It's just we're just kind of in a selling move for the time being. Yeah, again, I was saying a little bit earlier, I've looked through some of the penny stocks today. Obviously, those can change in any moment, but for the ones that I did look through this morning, really nothing looks good. So, no penny stock suggestion, if any, for any moments, or for the moment. Again, we're just simply watching the market go down. Even though, again, I kind of have a feeling we might do a little bit of a bounce. Again, that's kind of irrelevant because, again, we are in a bearish move. So we're just going to keep letting the market work itself down and then eventually look for a bounce to lower high reset and so on and so forth. Yeah. We will flip back bullish the market when the market flips back to bullish. So again, anything that we talk about long bias today on the stream is simply day trading, short-term counter bounces within a bigger macro selling environment, okay? So your main objective is obviously bearish, narrative bearish, main trend for now bearish. Short-term trends at any point could have little bullish moves. That's the narrative that we went with for pretty much the past 3 days, and that's the narrative we're pretty much going to be going with here today. Our counter target for the day is all the way back towards 659.47 for the moment. Again, that doesn't have to test. Many times it will. So again, this is just a situation where we have volume weighted average prices from today's pre-market trading, and that pretty much is up at 659.27. So pretty much that means we are bearish below the price of 659.7 today. Any sort of counter bounce may go back to, well, it's not really 659, it's the volume weighted average price. So wherever the volume weighted average price is just always the price, right? So essentially, it's just this. Market is just bearish below these blue VWAPs today. And we won't really see, yeah, it's just either counter bounce into, or this is going to catch up and then continue pressing price down, right? So that's pretty much That's pretty much it. Just know that anything below that volume weighted average price arguably is going to continue to get sold into. If only we get above that volume weighted average price, we might start to squeeze a semi-long on the day or something, whatever you want to call it. But again, just bearish for the moment. Not a whole lot more to say there, folks. All right, so our next desired selling destination for Bitcoin is going to be down here. Yeah, so again, down towards 108,097. That is that's a again next most likely selling target area when Bitcoin breaks down, which again kind of sounds silly when you say it, but ultimately when Bitcoin if gives up this VWAP here, then we go to that VWAP there. So in whatever fashion or shape the Bitcoin market forms it into, again don't know, right? But ultimately, highly valuable area, right about 108,097 next. So yeah. Also, for those of you that are in the stream this morning, again, we are no longer bullish the Bitcoin market for the next, call it year and a half to, say 2 years or so. Yeah, so that's that. Yeah. So again, longer term analysis, I think again we're probably just neutral bearish Bitcoin for the next year and a half or so. Our long bias sentiment has lasted for about 3 years. When Bitcoin was down trading around like 17,000, 20,000, we had mentioned, obviously, it's a good time to be long the markets, and we have kept everyone that has followed here, now on this channel, old channel, Twitter, pretty much anywhere. We've kept everyone on the long side of Bitcoin for about 3 years now, and just over the past couple weeks, we had mentioned we're no longer bearish, and now we are no longer bullish, and now giving the recommendation that we're actually neutral bearish Bitcoin for about the next year and a half or 2 years or so. So however you want to use that information, feel free. Okay. Well, no love at the lower distribution, which again is okay. That's just, again, it's a trade that we'd look for occasionally in a big old sell-off and see if we'll get a little counterbounce, which we did. It's just not good enough to really rally a cool bounce. It was just an okay bounce. But yeah, all good. What's going on, guys? Sorry, I don't know if you couldn't hear me there for a hot second. I don't. Somehow my speaker was muted. I don't know. I'm sorry. So if you didn't hear me there for a hot second, I apologize. I don't know what was going on there. Maybe my mic clearly was muted. So yeah, did none of you guys hear any of that? For how long? That would be rough if I didn't have any audio on this whole time. But anyways, yep. Where to begin now? Market is in a sell signal, obviously. Okay, about 3 minutes. Yeah, I don't know what. Yeah, anyway, so you heard most of that. But the most recent thing was. Oh, it was the news. Yes, so obviously we've been streaming here past couple days. We had mentioned that you're not long biased the market. You're actually bearish, right? So the whole downturn we've been essentially correct about, and as a result, we assumed that over the next couple days the news was going to transition bearish because that's what they always do. So we can see here this morning that CNBC is posting S&P futures decline for third day as Oracle and Nvidia continue to fall. The Wall Street Journal says futures are wavering because of the speakers, Fed speakers, and jobless claims. CNBC is stating that stocks are now closing lower for a second day as investors continue selling the AI plays, which sure they probably are. Why? Because the market entered a sell program, so stocks are going to go down when the markets are in sell programs. So Yahoo, CNBC, whatever, Wall Street Journal, they are, essentially telling the public it's because of a couple stocks selling off and fears of economic data, but not the fact that it has to do with the downtrend and the selling program that started on the market a couple days ago. So again, this is something that we like to do from time to time, is just kind of come in, check the news when the markets go from sell programs to buy programs, because you can see how the news shifts in real time as your market trends develop. So someone's going to look at the market being down today and for 3 days, and they're going to go, oh my gosh, what's going on? They're going to go to Google and read that it's about, who knows, AI plays. But the reality is just we just entered a downtrend a couple days ago, so it makes more sense to be bearish than it does bullish, and the likelihood that equities go down is higher, and as a result, you can assume and predict that news is going to end up being bearish, and since they don't know why, things are really going down, they're going to think it's something about AI or maybe it's the Fed. And those play a role in terms of psychology and how it might influence an investor to do something, but it's not really the reason. So yeah, anyways, ladies and gentlemen, we're a little oversold, if you will, on this market. So again, it's a bearish market, but I gotta say we're not extremely bearish on this low, because we would like to see a counter pop in a reset on the market before we would want to continue being bearish of any sort. But yeah. And we've already kind of knocked on the door of many sell targets that we had mentioned from the past couple days stream. So we yesterday I'd say, hey guys, it's good potentially see the market sell all the way down into $658.73. That's already happened, and there might be another level there, but regardless, so we've already taken the market down over the past couple days pretty far. So 3 down days, I don't know. I'm kind of optimistic that we're not going to sell off the market very hard today, and we're actually probably going to see some degree of bouncing going into today's market. So I'll say that we'll see how it shapes up, right? Every 1 second there's a pause on like the stream. I don't know. Yeah, give me more detail on that. Yeah, so like I said, we're in a bearish move in a bearish environment, but since we have 3 big down days, and if you look at the market, obviously markets can do whatever they want, right? So this would be a leg down, bounce, leg down, bounce, leg down. Does the leg down keep going down, or are we going to do a bounce? So I'm leaned a little more towards the bounce on this low than I would be being extremely bearish, looking to continue selling the markets in the immediate. So yeah, and that's just based off of having 3 big down days already, coming into some targets on the downside. And again, it's trading against the trend, right? Because the trend is bearish, right? We are in a selling program, right? So any sort of long that you try is a counter long in a bearish selling environment. So you're only long biased for the idea of short-term trading. Maybe it's an hour, it's 2 hours, maybe it's 10 minutes, maybe it's just 5 minutes, maybe it's a 2-minute scalp long, whatever, right? But yeah, we're not aggressively long this market by any means, but we're optimistic there's going to be a counter bounce as opposed to just continued selling. That being said, if there's continued selling, again, it doesn't even matter. It would make sense, because why? Because we're in a sell program and the market's bearish, right? Again, just probably the safest thing for most to do is just not even trade this current market because it's going down, right? And you're trying to catch a bottom if you're long. So the safest thing for most people to do is probably just wait until the market goes into an uptrend next, and then go long the markets. That's really the best idea for the average person. Yeah, well, hopefully the stream works okay. Again, we'll be here. I mean, yeah, so far there's really nothing to hold the market. I got to start getting a little I might have to start getting a little fancy with part of this analysis, because Yeah. Oh yeah, for those of you that might be kind of just tuning into the channel, we are have announced kind of a new potential downside target for Bitcoin. That's around 108,097. So that's going to be our next likely destination down, with a break of the current weekly VWAP over under, which is at 110,756. So cheers. Way blown out of that. That sucks. All right, so we got Bitcoin right now selling down into the weekly over under. I would say the market will be lucky if this were to break right away. It's most likely going to get met with some sort of hesitation and or support even in this area. So again, I'm not optimistic yet that, Bitcoin's just going to break 110,700 or so and just kind of run down. That's usually not how things work, but we'll find out. So I'm assuming we're probably going to slow down on this current sell move with Bitcoin. It's going to come into here and then maybe do a little bounce and something like that. So again, guys, just to update, we're not extremely bearish going into today's market open, mainly because we just think that after 3 days down, going into today's open, it just doesn't make sense to be aggressively selling the low of this market for, say, taking on. So for me, it just doesn't make sense to say be short or take on new entries short the market at this low. I just think the risk is too elevated for that play. Obviously, if you started shorting yesterday at the breakdown of the market and you're holding short, then yeah, it's fine to be short, right? But to look at the market today and be like, oh, it's down, let's be short, you've missed the start of the breakdown by a long shot, right? So you're elevating your risk significantly because you would at this point just need the market to keep selling. You don't have the start of the downtrend on your side. The downtrend started a couple days ago, right? Now you're selling well underway in the downtrend. So you basically just have to have things keep going. You don't have the benefit of being, early at this point. You're late-ish. So now you just need the party to keep going. Then obviously once the day opens, we'll do a bunch of the 1 minute and 5 minute volume weighted average price trade ideas and little mini micro trend and targets as we normally do. Also, I won't be streaming for extremely long today because today is Golf League. Today's actually the last day of Golf League for this year, which actually, yeah, our league always tends to go a little late because we get rained out a couple times throughout the season, have to make up the week. So sometimes we go into October, but not this year. But anyways, so yeah, today's golf week got rained out, and so we're doing a makeup week this week. So I will be jetting around, I don't know, maybe noon. Maybe a little past noon or something. Which also, noon is really early for a golf league. We actually play a pre-round before our league round starts, which is usually around like 4 something. 3 something. So, I guess, actually, I'm gonna make a poll. We're gonna make a little cute poll here. Feel free to answer. Wait, or maybe it's a Q&A. I don't even know how this stuff works. We'll just do a poll. I don't know, but we'll do it anyways. All right, so I'm asking a question, and there's about 19 to 20 of you, so I would expect all of you to answer. It's a simple question. By your answer, I will know how many of you guys are paying attention. So there should be a total of 19 people. And there's 19 of you, so there arguably should already be 19 likes on this video. So 10 of you guys are slacking. Or girls. But considering the data on our YouTube channel suggests that nearly 100% of the people who watch our videos are male, I'm going to go with the assumption that there's not many ladies in this stream. All right. The polls are coming in. The question was, is the market in a macro bearish environment? 67% believe it is in a macro bearish environment, and 33% believe it is not. Yeah, actually, I think I might have saw your email. And I just kind of, to be honest, I haven't responded. But again, you don't owe me anything, brother. If you start your own trade group and business, more power to you, I guess. But yeah, I mean, you owe me nothing, absolutely zero. All right. We're in. 56% believe that the market is in a macro bearish environment, and 44% believe it is not. 40. So I actually find that pretty interesting. I guess maybe even another better question would be like, what do people believe is macro? Or because that also has a couple different yeah, because macro, some people think it's months. I guess I kind of consider macro really anything from like days to weeks, as it relates to what we talk about on stream. So that might be a little something. It is 9:13 on, what is today? Wait. Oh, is today Wednesday? Hold up. Hey, today's Thursday. I don't really know what I've... Oh, I know what I've been doing the past couple of days. I've been streaming. No wonder why the days are going by quick, because you sit in front of a computer screen and just play with your charts all day. Alrighty then. What's up? Cooks Delta. Hey, brother. How's it going? Yeah, it's been a long time. I'm... just here on YouTube doing my my public service. That's pretty much it. Fed Gouldsby says this thing that is most worrying is possibility that inflation rising proves to be more persistent than we think, and we are put in to stagflationary environment. Still optimistic on golden path with inflation coming down. Wow. What an absolute genius. That's like me saying, I think it's going to rain, but I'm optimistic that it's not going to rain. Let's get a golf clap going for Gouldsby today, ladies and gentlemen. What an absolute gem of a Fed speaker. We could have not asked for anything better in this life. All right, so we're going to end the poll. 60% believe the market is... Oh, wait, someone just 55%. So we're at about half and half. Half people believe the market is not macro bearish, and about half believe it is macro bearish. Wait, I learned something about this in my studies, which would be... Hold on. Wait, that has to do with bullish environments. Hold on, wait. There's a... Oh, I forget. I have to look this one up. But there's actually... We know the contrarian kind of pessimistic view when it comes to market sentiment, which is if more people are bearish, then market's probably getting ready to bounce. And if too many people are bullish, it's getting ready to pull back. But I think it was if... I don't know if it was half and half or if it was like 30, 30, 30. But there's a metric where the market is most bullish. And when it's most bullish is when I think half the... I think the market is most bullish when the markets are actually divided. So when people think, like, for example, if it's 50-50, then the markets are actually most bullish. We've seen markets put on the biggest gains when public or retail or just market sentiment is divided between, I think, bullish and bearish for an extended period of time. We put on the largest gains in the market, which makes sense because... it's kind of like everyone in the market's halfway in, halfway out, right? What better time than to throw a bunch of gains? But if everyone's too bearish, then obviously things generally don't go down. If they're too bullish, generally things pull back. But if everyone's kind of teetering on the sideline, she rip. Macro. So macro can have a bunch of... Well, I don't want to... Actually, I'm just going to chat GPT it and give you a more professional answer, because sometimes I even question myself what that means, because for me, as it relates to my trading system, I think macro is anywhere from like days to like weeks. But for, I would say like CNBC, they're going to say like 6 months. So let's see. So shorter macro is 3 to 12 months. Micro would be seconds to weeks, right? So in reality, macro would be months to like a year. But I just call it macro because, you know, most people think of short term like day trading, right? Most people think of macro kind of more like swing trading. And the system that we use to pretty much assume the market would be down the past 3 days, to me, is more of a swing system that can then kind of trickle into day trading, if you will. Um, so I use macro because it helps emphasize this is more of a swing thing. If I say the short term is bearish, right? Well, look at what we're doing right now. We're bouncing. So someone's like, well, no, it's not. It's short term. Yeah, so maybe short term is bearish, micro is bullish. Maybe that's the way we have to start doing. I don't know. Either way, I don't know. It doesn't really bother me much. It's more or less so as long as you guys understand. But yeah, kind of like I expected, macro would be more like 6 month stuff, and the way we use it is shorter than that. All right, we're going to end the poll there. 64% think it's a macro bearish environment. 36% say no. Alrighty. 14 votes out of the 25 concurrent viewers. People are lacking this morning. Again, for the 24 of you guys watching, just want to make sure that we're kind of up to speed on the main narrative for right now, maybe even for the day. The main narrative is short-term macro bearish environment. In the short term, we are probably not bearish going into the open, because this is 3 days down in a row. We are on the third leg down of a sell move. So we are not optimistic in entering and looking to be bearish on the bottom of this move. We are most likely looking to be counter trend, short-term long bias going into the open on the bottom of this leg, etc. You know, I didn't actually. I was actually thinking about restarting my CMT studies and finally getting my designation. I kind of slowed down on it because I was actually looking at becoming a financial advisor as well. So I'm like, should I do the CMT or should I just take my time and study to become a financial advisor? And then I was kind of rebooking on the idea of becoming a financial advisor. And then maybe going back and finishing it, which I really should after spending all the time. But to answer your question, simply no, I haven't, which kind of annoys me. But the second test was, well, I just didn't give myself really enough time. I tried to speed through it in study, and it was just far more complex than, complex maybe is a incorrect word to use there, but it was far more challenging than the first test. Oh yeah, by the way, this green arrow points to pretty much where I think we can, arguably see a counter pop to. So let me explain that little text there so people know. Counter pop target's an expected level where you could assume the market can pop back to. Rolling resistance over under. Our targets that we use sometimes are not static prices or stationary prices. They are ever evolving prices, because a lot of times they will be derived from volume weighted average prices, which move in relationship to price as well. So rolling resistance means if we do not counter pop the market back to said prices, then it is also likely that the volume weighted average price ends up catching up to price and rolling down onto the price, at which point it could then maybe use it as resistance and then roll the markets down. So generally speaking, whenever you guys come into our stream here in the morning and you see me talking about counter pop targets or pullback targets, kind of like you see right now, generally it's derived from the earlier pre-market trading sessions volume, and then we're looking to attack that volume zone going into the regular trading hours chart. One of the better ways that I kind of sit with that idea is that it's this kind of trade concept. It works pretty well. It doesn't always work, but it works enough, right? But the best way I think about it is we're taking the action from pre-market, right? So I kind of think of the pre-market trading as a different market, which it is obviously, right? Because it's pre-market than regular trading hours. So let's just think of those as two separate markets, and let's just think of it as competitors for a second, right? So the regular trading hours is a competitor of the pre-market trading hours. So when the regular trading hours opens, a lot of times one of the things we like to do is go fight all of the pre-market traders' volume, right? So we're taking the volume metrics from pre-market, running that price, and then into a lot of times the open or into the regular trading hours, we will go and attack that level. So it's kind of like attacking their volume zone or the front line, right? Going to war with the regular or the pre-market. So again, that's something we do. We take the pre-market, look at all of the action that's been presented in the morning, all of the market participants in pre-market, find a key volume trend, extrapolate that, and then going into the regular trading hours, look to move prices to that volume zone or their volume weighted average price. I guess I had an update on my chat section and was hidden. I've been looking for 20 minutes. Emerald, I'm not sure what that means. I don't know if you're talking about the YouTube chat or another chat. I couldn't tell you. Yeah, I'm gonna go get a refill on coffee real quick, and I will be right back. So we'll put a little cute BRB coffee, there. Okay, I am back. We are back. We are here. You know, I haven't even really haven't even looked at the volatility index this morning. Let's take a quick peek at that. But obviously it's going to be up. But the question is, up into what? That's a 4 hour, 200. 4 hour, 200 SMA. Nothing. 21 hour, 21 hour, 60. Interesting. I already hit that again. Yeah, I can't really muster up a whole lot with the VIX this morning. VIX 50 is right. Wait, is that right? That's what? Hold up. Or well, that would have been. How was yes? Oh, well, I guess that makes some. Oh, yeah, it makes some sense. Yeah. Yeah, I don't really got much with the VIX. APP is looking strong. A PP is looking strong. Interesting. Everyone loves a strong APP. Yeah, I mean, APP is in a weekly uptrend. It's in a daily uptrend. It is in a 4-hour uptrend. It is in a 1-hour uptrend. It is right now testing its, wait, oh, that's wrong. Well, I guess it's not necessarily wrong. Hold on. Yeah, right now, APP is testing its 1-hour over-under trend. Yeah, I mean, it's just, it started a short-term sell move, back testing 1-hour support right now. Show you real, what time is it? 9:29. Never mind, we're getting into the open. But yeah, APP is basically testing a 1-hour over-under trend. That's at 624.86 or so, or 628. Yeah, I mean, as far as swing trading and in the long-term chart, it's all positive right now. All right, market is opening. So far starting, the market internals are not bullish in the open. The first opening candle for the day across the Mag 7 is red. So let me bring this up real quick, just so you guys can see side by side. Oh, no, not like that. All right, maybe not. Okay, that's cool. There we go. So again, see the open, see how the opening is dumping out. And if you look here on this chart that I'm circling, right? Apple, Microsoft, Amazon, Meta, Google, Nvidia, those are all red out of the gate. So obviously, when the major market cap stocks are performing red, you're less likely to see positive movement on your stock market, at least for the time being. If we look to the upper side here on the NASDAQ 100, those are currently red. The issues on the New York Stock Exchange, currently red. Issues on the NASDAQ, red. Issues on the S&P 500 are the only two green candles we have. So it tells us that there's issues within the S&P 500 that are trying. And that's the only market right now trying. Some of the NASDAQ is now trying green, right? You can see that. So generally speaking, we know how we're like, yeah, I think we're going to be a little more long bias into the open. We're going to look for kind of a bounce. We're not going to look for as much selling, etc. Well, when we get into the open, what are we seeing? What's the market saying? Right now, the market is saying that there's not enough buying across the major markets to clearly create a bounce into the open for right now. So hands are off, right? I can clearly see that. Now, we already know that we're in a macro bearish environment, right? But we're thinking maybe 3 days down, maybe we want to counterbounce going into this open. All right, if that's true, we got to see some sort of buying pressure across these markets. And right now, there's not enough of that, clearly, right? So hands off on any counterbounce going into the open, trying to bounce the markets back up, blah, 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 blah. It's just not there for the moment. And we're just going to kind of let this macro bearish environment do its thing until it tells us otherwise. So hopefully that makes sense. Again, these are market internals. That's what we're called. Well, that's what they're called, the market internals. So as opposed to looking at the actual chart of the SPY and going, is it bearish? Is it bullish? Is it this? Is it that? We just look behind the curtains at all the major markets that move markets, and we say, what are they doing? Well, they're performing not good enough right now, so market's not going to go up, right? You can kind of see what's happening here too. You can kind of see we're starting to get some green on the NASDAQ. We're starting to get a little green on the S&P 500. What you're going to need is you're going to need the Mag 7 to start performing. You're going to need the Mag 7 to start picking up, and then the markets will bounce. If you know, right, if they're meant to bounce, they'll bounce. And the only way that's probably going to happen is if the Mag 7, FANG, big market cap stocks start to perform. Now, our volume weighted average price from the pre-market has adjusted all the way down. Remember, we said that those prices are not stationary. They're ever evolving targets. So now the counter pop rolling resistance level is priced at 658.34. So if this bottom does end up kind of getting picked up and popping, that would be the counter target now, and then still potential resistance. We can maybe look more bullish if we were to get above it, but for the time being, we're not above it, right? So any counter pop target is still targeting about 658.40s area to 658.30s for the time being, right? So it looks like, well, you can see here, right? So see how we're starting to put a wick on the bottom of that candle on the SPY. You can see, look at the S&P issues here behind the scene are rallying. The issues on the NASDAQ 100 are rallying. Some of the NYSE is starting to rally. Some of the NASDAQ 100 is starting. But what we don't have is we don't have the major market cap stocks here that I'm circling rallying. Those are still red. And that's why this market has not bounced yet. Because the major market cap stocks are still red. And they hold the biggest weight on the indexes. So this is a perfect example where a lot of times people can get tricked up with market internals. They're looking at the S&P issues going up, and then they look at the S&P and it's still down. And like, well, this doesn't make any sense. It's not helpful. Well, yeah. I mean, we know that, you know, like basically 10 stocks rule the market. So when when your 8 stocks that rule the market aren't performing, and yeah, I mean, yeah, it makes sense. There are times where we are seeing, you know, the Mag 7 perform poorly and say like the S&P 500 still going up. Those are more rare, but that just tells us that a lot of the issues in the S&P 500 are rallying. So it's like, you know, you have to have a really big portion of your S&P 500 rallying to rally a market, even if your Mag 7 are bear. So again, perfect example. Look at this. So see how the SPY is dropping out. Look at the S&P 500 is going down, but the S&P 500 issues are going up. How? Because the major market cap stocks, Apple, Microsoft, Amazon, Meta, Google, Nvidia, etc., Netflix, those are not performing. So our markets are not going to go up for the time being. Which, again, are we surprised? No. Because why? Because, again, market is in a macro bearish selling environment. The title of the video is, I titled it Stock Market and Selling Program, Market Oversold into Counterbounce Levels. So half of that's right, half of that's wrong. Because, again, market's not counterbouncing, right? But it's a little wrong about that. Well, no, it's not wrong. I mean, we were right on the first counterbounce level, which was around, doesn't matter. So anyways, macro bearish environment, things are going to go down. Just that's it. So now what we're going to do is we're going to take a volume weighted average price of this last leg. We're going to start anchoring, and this is going to start becoming some of our micro analysis. Everything we've been doing is kind of more of the, you know, a little larger, if you will. But yeah, essentially we're going to now, this one's a breakdown. So this is right here, yellow box going on a string. That's high frequency algorithm counter pop level right now. And then micro resistance potential down. Remember, that's a updating target. So price is not stationary there. Only if now, you know, it'd be like, that's the way we would read that. Yeah, you know, so definitely a lot of it wrong that we could maybe see a little bit of a counter bounce or just, you know, a little bit of a long shoot in the morning going into the open. Definitely wrong about that. But did you see how we navigated it, right? Like we said before, we navigate that by looking at the market internals and making sure that the market internals at the open would align with what we're thinking. Today they did not. As soon as the market opened, we can see there's not enough strength to bounce it. So we just hands off and just let it keep going down. All right, so that new micro, not new, but that micro trend level we're talking about here is updated a little bit. I'm going to try to draw a little less on the screen so it gets less busy and I don't have to delete as much random stuff. So it won't be as interactive of a stream. It won't be as detailed, but yeah. So micro chart SPY currently down. Volume weighted average price of interest currently is, you know, wherever this box is at. And so that also means as long as the 1 minute chart is below, then this market just stays down, right? So this is still a counter pop to down level, right? Again, just making sure, I just repeat it over and over and over. The market is in a macro bearish or short-term bearish swing down market. We are not bullish swing. Anything discussed long is simply counter long opportunities within a greater bearish trend. The volatility index is in an uptrend. The volatility index is not breaking down. All right, so volatility is up, which should be happening when the markets are going through sell programs. Markets continuing down. Is anyone really surprised on the stream? No. This is, again, this is generally what happens when you enter sell programs. The news has flipped bearish. It is all Jerome Powell's fault. It's the jobless claims numbers. It's PPI. It's because Donald Trump said something yesterday. Who knows? I don't care. Whatever they say on the news, I have not been paying attention to it. 3 days ago to 2 days ago, right? On the stream, markets are bearish, markets are going down. Have not read any bit of news, haven't even considered it. Didn't need to know the news that the market was entering a selling program, right? That's kind of something I try to emphasize here, is that you don't necessarily need the news to know the trends of the markets, right? Or, you know, why things are doing what they're doing. What's going on with their friend Bitcoin? Oh, Bitcoin bounced. Yeah, obviously. Well, it actually bounced prior to our level, but again, it's pretty straightforward, right? You obviously would expect Bitcoin has support opportunities coming into the weekly zone. But anyway, so look at this market getting absolutely destroyed. Oh, actually, did we just hit? Hold up. Wait a second. Did we just hit something? We did. There might be. Hold on. This is kind of a random level, but there might be a bounce here. We'll see. I'm not. Again, I don't want to be the one telling people to buy into. No, I would never say that. You're never, chase into falling knives. But I'm just mapping off levels that in the past I know could be used as long levels. So I'm just kind of looking at this here. Market might use this as a temporary support. Gotta check some weekly stuff and some dailies. That's always the thing too, is when the markets are going through kind of like a selling program, you're basically sitting here going like, when's it gonna bottom? Where's the bottom gonna be? What level are we gonna use for a bottom, etc. And I don't know. So again, we're starting to do a little bounce. I don't want to say we're starting to do a little. I mean, it's nothing crazy. I mean, it's just, this is an old
And I don't even know if there's going to be anyone that's even interested in this level anymore because it's so old. This is just an old. So we're basically cutting through an old volume weighted average price of an older buy signal, which again, sometimes they'll use, sometimes not. So you can see there is no green candle on this. So that's just extreme weakness and extreme selling for the time being. So much so that they haven't even allowed a 1 minute retrace of the last leg. So when it's like this pretty much tells us that, and I would say, but generally speaking, when you have such an aggressive move like this down and no green candles, that's usually algorithms that are just forcing price down. It's called an algorithm force down, if you will. Doesn't mean it's going to last for forever, but we can just see that this is, this is not, normally markets do this, right? Stuff like that. It's not as often that they just go straight down, right? When they're just going down, usually that's algorithms that are selling, forcing down, down, down. They don't allow the retraces, but anyways, so something to think about. Yes, our current, current counter trend pop level is still, see how this just keeps going down, right? So earlier it was all the way up here, now it's all the way here, now it's all the way here, etc. So that's another reason. That's just another thing that a lot of our price targets are evolving and updating. That might be another reason why I think other, newer traders and stuff might kind of struggle with price action stuff because they pick stationary price levels. Their support level never changes, or their resistance level never changes. It's just kind of a horizontal line picked at some price. Whereas we look at volume weighted average prices of specific moves and markets to get ideas of where those trend levels are at. So, but anyway, so again, our first counter pop level is back to $656.20. Right now we're testing the 1 minute SMA. Again, we are on an old VWAP buy signal, support over under. That's what I was talking about, is I'm trying to seek out levels that may work as support, just because why not, right? If things are going down and things are eventually going to stop going down, they're going to have to bounce at some point or find some support. So when you're in a selling operation and going down, your objective is to figure out where can those sell targets be and then where can those bounces start. Generally speaking, the bounce or your support that you'd be looking for in bearish moves is going to be the end point of a sell move, right? So good support is always the bottom of a sell target, right? And good resistance is always the top of a long target, generally speaking. Oh, the old market. Gotta love her. Again, we're just basically holding some random support here, 655.37, maybe doing a scalp bounce back to, again, that 1 minute volume weighted average price as mentioned. Let me double check a couple other things here. Not daily, no. Now, anchoring 1 minute volume weighted average price to this most previous low, and then also the split up candle, because obviously if this doesn't break out the 1 minute VWAP structure and go higher, and then we end up catching resistance here, the target of this pullback will be to like there. So that's pretty much how this market is now set up, is we are bouncing the old VWAP buy signal level, support over under. We are bouncing it up to the first volume weighted average price of the micro trend that was created from earlier today. So the micro trace or micro trend target trade idea retrace is now complete. So if so a lot of times if you're long in this area and markets are bouncing up, that's going to be a 1 minute over under and kind of profit take, if you will. So that trade idea is complete. So you see how that target kept moving down all morning, right? So that's what I was talking about earlier, is that our price targets are ever changing and ever evolving with the market. We don't necessarily, or we're not always looking at a static, stationary price level. My thoughts on options flow, it's never something that I was great with. I think there's value there for sure. I'm just not good with it. So I don't have enough experience, nor, yeah, it's pretty much just enough experience or smarts in that area of the market to teach it in a way that I think is effective for others. Alrighty, so that's pretty cool. I mean, how cool is that? You just look back on your chart, you find an old level that could arguably be used as support, come on the YouTube stream, put it on the chart, bing, bang, boom, there's your bounce, give you a target, not bad. Not too shabby. I'm sure they did that on CNBC this morning. Again, our micro trend pullback level is on this low side, so it would be that yellow. Maybe I'll change the color of that guy to red. So our micro trend pullback level is now down to here. Obviously, that is only obtainable with the micro chart holding its lower high here. But again, this is an expected possible lower high zone right there. Obviously, if we start to clear house above, that's another story. So that's why I always draw, kind of those two lines, which is, again, this is the over under. So if resistance, it's just, that's just it. It's right. This is your over under. So above can start to squeeze out some of that micro trend, right? And it would have to stay below to keep going down, right? And that's that. So now we're probably squeezing up to our 5-minute targets. So now our next targets up will be 5 minutes. So this long should go up to where I'm moving and adjusting this box right there. So now the targets would be kind of this upper box you see on the screen. All right. So essentially what we've done is we've taken this last leg. See this leg of the market? We take this last leg. And the key volume trends of that leg would be, here's the 1 minute, and then this is all 5 minute. I know there's a lot. I keep trying not to draw on the screen, but there's just no other way to do it. You just kind of have to. But yeah, pretty much what we just did is bounce the market at a previous old buy signal support level, and we have backtracked the shortest of the time frames, the 1 minute, now the 5 minute. There's a good chance we're going to see this market even retrace all the way back into these levels up here. But anyways, don't want to get too ahead of ourselves, right? Again, let's see what's going on. Yeah, sometimes I get a little ahead of myself too, because I'm always like, yeah, well, but anyway. So again, just follow along, have fun. I always try to be like as detailed and think of the next move that can happen before it happens, because that's the fun stuff. But then you can get ahead of yourselves at time. But anyways, you guys can see we have the 1 minute VWAPs off low. The price is about to sell into those right now. There it goes. All right, so it's like, so why did we do that? Why did we just pull the market down to that red box? For the same reasons that we took the market up here. Well, kind of. Right? So we looked at the trends that were created from this high and this move down, and right? Then we took the trends created from this leg up, and it's right there. Effectively, the market just does what? It trades up and down all day long, all week long, all year long for eternity. Up, down, up, down, up, down. And as it goes from up to down, it simply just trades back and forth, to and from what I call people's volume levels, or VWAP, right? So that's not the only part of the strategy, right? We use VWAP, we use Fibonacci, standard deviation, SMAs. But anyways, so yeah, that right there is how you would have predicted or assumed that price could again pull back all the way to here. Why? Because from this low, this was untested volume, right? Or another way of saying it is, right, if the market is going to, say if the market's going to establish this as a low and it's going to be like the actual low, then the market has to bounce and then just go up. Or the market has to bounce and establish support, or the market has to bounce and create a higher low and trend up. So this red box would be an area where a higher low could be created, right? So that's kind of it. If the market's going to create a higher low, we could create a higher low. If it's not, then it's going to take this out, right? And the longs that bought up get stopped out to the previous low, generally speaking. But anyways, yeah, I don't want to get too much into the weeds there. So. Ba 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 da 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 da. Thanks, Steve. Appreciate that. Yeah, I mean, I've always, I always kind of wonder how, people interpret, my kind of stream and analysis versus Brandon's at times. I know a lot of people love the fib stuff. Some people may like the, I mean, we don't, arguably hear the feedback in our private group much, but nice voice. Well, that's good to hear. It's really weird hearing yourself in videos. Yeah, I don't know how often you guys hear yourself in a recording, but it definitely seems weird. So whenever I make a video and watch it over, I'm like, man, I just sound weird. And then I'm like, people actually listen to me. That's kind of crazy. Because to you don't even sound like yourself, right? Me right now sounds like myself. I'm talking, but then when I listen to myself in a video, I'm like, that doesn't even sound like me. Oh, okay, yeah, we're really in the same boat we've always been. What boat is that? That boat is you wake up every single day, sun is usually shining unless you're in the winter season, and then there's going to be some overcast. You probably eat some food somewhere out through that day, and then as the sun goes down, you generally go to sleep and then wake up the next day. Oh, wait, we're talking about the stock market. I forget. So yeah, basically we're just in a macro bear selling environment. We've been there for the past 3 days. The only long trades you do right now are counter long trades because the market does not swing long. And that's about it. And, oh, yeah, by the way, We could probably start doing some new anchors here for some micro price action, because this last high that was put in is pretty decent. So we would take this VWAP, we'd move it here, and then so here's another thing, guys. When you see me anchor, you usually see me do two. You almost always see me do two anchors. Sometimes three, but it's usually two. And the anchor spots are always like in this case. See how the market goes up? Green, 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 and then I'm anchored to the red. I'm not anchored to the green because the green was a part of the long up, right? And now if I'm trying to track the volume weighted average price down, I want to track the red, right? Because the green is of the previous. The green is not of the now, right? So we take the high here, and then we also take usually the next candle that creates the break. So you see how everything is up until right there, and then it breaks down, right? So we'll take the high, and then we'll take that preceding or that following candle that really creates the snap move, and we anchor there. So I call that anchoring to the high, and then I call it the split candle, because the high is the extreme. But the next candle, that's where everyone really gave up, right? You can see that. If we look at this 1 minute chart, okay, right? Everything was up. This was a top, so it got beat down, but it was then right here where the market was like, yink. So we'll anchor to this high and that split and assume that when that leg stops and pops, we're going to go back to that volume weighted average price and or the high. And then that's where the micro high frequency trading will try to create the next lower high. So you see how we basically use previous price actions of the market to extrapolate volume weighted average prices that can then guide us on the next leg. Okay, so we use previous price of the day to basically predict the future price of the day. And then same thing here. So if you look at this long move, right? If you look at the long move, what did I anchor to? I did not anchor to the red. I anchored to the low green and then the following candle that split up, which would be, right? So market comes down to the low, and then it's the next candle that really breaks up. So we take the VWAP of that and we'll run it out. And you'll see it. Look at the difference though. Look at the difference in the low to the high. So in the low, look at how close the VWAP structure is together. It's not much difference, right? Then look at the one off the high. Look at the high, then look at where the snap candle starts. So that's a big difference, right? So we anchor both of those, and you can just, again, so it's the same approach. It might just look different because of the spread of those candles. What's up, Rico? You know, we're just here in the Boiler Room Network, giving out terrible analysis, stuff that does not work. But man, look at that. We're bouncing, baby. We are bouncer magooing. Like I said, this is an old VWAP support over under. I can tell you right now that 99% of the public, which that might be a little off, but basically 90% of the public has no clue what this is. No one teaches that. No one but me. Well, that's not true. That's kind of cocky or slightly unhumble-ish. Someone could be teaching it. But again, I don't even watch any YouTube videos anymore of trading stuff. Very rarely. So I don't really look to YouTube to learn new things for trading anymore. So maybe someone else is teaching this and I just don't know. But yeah, I would say still 99% of the public has no clue what level we're picking here at 65527 to currently kind of use this as a tradable bouncing area. And if they do use it, I would be extremely surprised because I was the one that developed it. At least the idea or the concept. At least from my knowledge, so I don't know. So yeah, that being said, I know no one is looking at this level and thinking, oh, this is the old buy signal volume weighted average price, so this is arguably a support level that we can use to bounce the market. They might be looking left at a chart and have a Fibonacci here, or some sort of just support from price action, which I'm sure someone does. But again, they're probably not using an old buy signal 30-minute volume weighted average price. But anyways, so yeah. And yeah, as far as this long goes, like I said, I was circling all up here, and the reason I'm circling all up there is because yeah, if we do really establish this low, then yeah, we're probably going back up to that area, because that's just previous levels we broke down, and they're of interest and so on and so forth. So So I kind of gonna add even add a little more here in this low, and I don't know, see how far we can bounce this sucker. Again, I'm adding a little bit of UPRO 3x leverage ETF down here, so I'm not taking some futures on this, because I'm gonna see if maybe this turns into an established low that really rallies the market up, and if I'm wrong, I'm not going to lose a lot of money using UPRO. So just adding a small little bit here, see if a low gets established. Again, it doesn't really matter. Yeah, let me just take a look at this 30-minute too. Again, this is a counter long in a bearish environment, right? So this is me essentially going against the system, thinking that I know more, which is that, again, we could arguably bounce this a bit here. We'll see. Don't know. That is not a recommendation to follow, too, by the way. But yeah, what was I doing? I wanted to look at SPX. I want to look at the 30-minute. We are way down. Let me double check some fib. The Fibonacci. My Fibonacci says we hit a 261 there, so that's the 261 of the current sell signal. Not bad. We are on the previous buy signal, volume weighted average price support. And that 30-minute chart, there's really no way to establish that there. Yeah, I mean, we're probably I think I'm just going to stay. I think for the moment, the only thing I really see is just staying long bias, the oversold market, off of our old buy signal VWAP support, and just trying to bounce the market as high as possible until we find some sort of resistance. I'm trying to find where that resistance might be at, and I was looking at a 30-minute, trying to kind of gauge that, but the chart with the gap down won't allow me to really do what I would like to do there. I mean, I guess I could still do it, but it's just going to be a little, it doesn't really matter. It's just a 10 SMA there. It's nothing special. So. All right, again, gonna take a little profit myself on that push as we're going up, and now I'm just gonna set a little breaky even free trade now. So pretty much zero risk of this long for me now, with the market appreciation over the past couple minutes or so. That allows me to make some money on that little trade, and then pretty much just ride the rest free at this point. So if market goes down, stop out, don't even care. You don't watch ICT? I do not. I have never, or that's not true. I have watched maybe 1 or 2 ICT videos to learn fair value gaps, and that journey lasted about a half a day, and then there was no more. All right, I'm gonna get back into this 1 minute chart because we need to anchor this low here. So we're going to take VWAP. We're gonna add VWAP here, and then we are going to add a VWAP here. And then so this one's actually, so this is kind of interesting. This is a good little learning lesson for you guys, for those that are going to use VWAPs, you know, relatively the way I do. So you see how, so there's a couple things. So number one, we're anchored to the low point, right? So obviously this is a new low, right? Mark comes down, new low. So we're anchored to that first green candle kind of as that low starts to change up, right? You will see that the next candle is red. So this candle kind of breaks up and it's red. But you can see I'm not anchored to that one. I'm anchored to the next one, because the next one's really that green candle that explodes and kind of changes that little 1 minute structure there. So not only do we have kind of this low point, but we also had this previous high kind of right there, right? So that previous high right here, that just got taken out. So this is also kind of a breakout spot as far as just the structure that's been taking place today. So that's kind of a breakout. So not only will we be anchored to the low, as you see, but I will also anchor to the breakout now. So I learned this part of it, anchoring to the breakout, when the volume weighted average prices here on the low wouldn't get tested. So I kind of learned this part of it from the previous anchors you see on the low not being tested. And I'd be like, well, what the heck? And then I realized there are situations where you may have a break of structure in a chart, kind of like we're seeing here, where we had this previous high and we broke out. So if the markets are to pull back, instead of pulling all the way back to here, they'll most likely pull down either A, to the breakout, or to the breakout volume weighted average price, and then attempt to go higher. So it's kind of one of those situations that I ended up learning through trial and error, well, I guess with most things, and that is that when you have a break of structure, just in this situation, and you're using VWAPs as the way we're using it, you're more likely to pull to this VWAP first and then maybe continue higher, as opposed to just drowning all the way out to those VWAPs. So it's kind of one of those things where I'd be waiting for the pullback to these VWAPs to get long, maybe, and they just don't come. And I'm like, dang it, what the heck? And then I was like, oh yeah, this sort of scenario I see always happens when we kind of have a break scenario, and instead of going down to here, we'll only hit that VWAP and then try to continue. Right? So yeah, like I said, I'm just long. I'm long bias counter trend the market right now. Again, you guys are going to be, not you guys, but just in general, right? We are in a macro bearish trading environment. Yes, but you can still be long for counter bounces, which means if things are bearish or you're in a bearish environment, you have to be able to identify oversold levels in the chart that make sense to then be long within the bearish environment, right? So again, what we're doing here over the past, say, 30 minutes, an hour, is we identified a low risk support based off of stuff that had happened in the past, and we used that level to bounce today the oversold bearish market in a downtrend. Now, if you look over the past couple days, right, think about this. The sell signal started, where did the sell operation start, right? Our selling operation for the market started here, where I'm pointing this arrow. There, and then also the next day here, okay? Now, the average retail investor, or just average trader in general, A, doesn't know that, but B, they see the markets are going down, and then they go to Google, and Google tells them that the world's ending and AI selling off, and Jerome Powell said, you're dumb, whatever, my tie's green, or that it's the jobless claims and unemployment's going up, so the world's ending. So they're all scared, and now they're bearish, right? Because the internet basically says, right, you're bearish, or the world's ending. And then we bounce the market. So again, this is kind of a situation where we have been in a selling operation. We're coming into oversold supports while in a selling operation. So we're looking to counter long the market right now. That's it. So it's not like we're buying this low and we're thinking that this bounce is going to be the be all end all that reverses the market. It could be. I don't know that for sure. I just know we had a low risk support area there and that we are definitely oversold and that this has some room to bounce up. Now, does this bounce end up being the absolute low? Again, I have zero clue, and I'm not trying to assume that it is. So that's it. And if we look at where the 50 SMA is at, the 50 SMA is all the way up here. So we're still very, very far from starting a new buying operation, right? In order for us to be swing long the market, this market would have to go from here all the way up to here and then get above here, and then we would be swing long. So what that means is the market's not going to do that. It's just not. The market's not going to bounce all the way straight up to there and then go into a buy signal. And if it does, then you can call me an idiot, because that would be the craziest thing ever. But what's most likely to happen is this SMA over the next couple days, weeks, is going to start calculating down. And as it comes down, price either bounces up to it, price either continues to sell, and then this gets closer and closer, or we just trade sideways and then this gets closer, and then we get the opportunity to maybe go into a buy signal like that, right? So basically we're in the moment where we're already well sold off on the sell signal. We're into oversold supports. The trend that tells us to flip to swing long is still really far away. We need a lot of time for that to catch up. So we're kind of in this oversold bouncing zone, but not quite ready to be swing long, but too oversold to really be short, right? And that's exactly where we're at in the market. As far as sentiment, psychology, we are oversold, counter longing, still in a macro bearish trend, far off from swing long bullish sentiment change, etc. Too low to be shorting, etc. So I hope you guys enjoyed that bounce. I hope you guys are winning. Again, everything on stream is just my opinion. It's my own analysis and systems that I've learned over the years. And no way, shape, or form is anything that we're doing trade signals like that. This is just analysis. Many times foresight analysis, not hindsight 2020, because objectively that's when things are fun. So again, if you guys have any questions, feel free. That's it. Cheers. Let her rip, baby. Grip and rip this. Oh, hell yeah. Chris from our private chat. $3,248. Nice, brother. That's great. Good stuff. Do you think it's a good time to short WBD? I don't even know what that is, but I will take a look. WBD. No, I don't. Nope. And really, just the main reason. I'll bring it down real quick. Again, the main reason why I don't think you. Well, let me rephrase that. I have to be careful on the way that I say things, especially these days with how much more accurate I'm becoming at this, because it does toe the line of investment advice, if you will. So, based off what I see in the market, I don't see a need for me to be bearish shorting WBD. And that's mainly because I don't see that WBD is in a downtrend of meaningful significance. It's just not in a downtrend. You would be shorting in an uptrend, which obviously is possible, but I would be more optimistic bearish if this were in a downtrend. So I will show you real quick what a 4-hour downtrend looks like. So this is a 4-hour down. So again, essentially market up. It eventually gets below the 4-hour, breaks down, back tests, and there's a short, right? So there's more likelihood of being correct if you're in line with the trend of the market. So right now the trend of the market is up on WBD, and not only on the 4-hour, but also the 30-minute. 30 minutes generally the first level we'll look for to be bearish. So for example, you could see back here on this 30-minute, right? 30-minute is positive, so that's a long, right? 30-minute is positive, long. 30-minute catches up to price. Eventually market breaks 30-minute, and there's your short, right? And then we bounce, gets back over SMA, and there's your long. So the same system we use for the stock market, like we're doing today, same system we use for individual equities, but individual equities are a little more volatile, so they can be a little bit more tricky in regards to using that system. So that's what I would say with WBD, and I hope that helps. Connor, would it be possible to ask for a small favor? Could you list those large cap companies like Apple and others like NASDAQ to look at? Yeah, so yeah, for sure. So also what I did when I made my list, and it could change, is I literally just go to ChatGPT and say, give me a list of the biggest market cap stocks in the market that have the biggest sway or weight on the indexes. All right, and so I'm just basically using ChatGPT to make this list for you at this point. Wait, hold on, don't do it like that. I guess it does. So, just to give me list of tickers. All right, so here you go. Copy. So if you want to look at the biggest market cap stocks, it would be this right there. Where are my regression lines? Those are on another screen. So, I mean, if you want, I'll bring those up in just a sec. No, we still use standard deviation channel. Actually, that's what I used for the last market correction to be long. But yeah, so 1 second, let me just bring this over. What? Why the heck? Oh, yeah, there. I was like, what the heck is going on? Here you go. So here's 180-day, 4-hour. So looking at the 180-day 4-hour, the market is in the +1 standard deviation. So that means the market is not really on sale. The market is more of an overvalued regression trend. Also, this dip down here, that was -3 standard deviation last time the market crashed. That's where we went long the market again, because it's super on sale. Let's go to a 1-year day. So looking at a 1-year day, you see the market was down at -3. So pretty much the last time the stock market actually kind of went through a correction, the whole world was ending. This is where we were getting long, right there in that bottom, because statistics said we should be long there. And now you can see we're trading a little over +1, near the +2. So up here would mean not good value. This is not of an oversold market, right? If you're buying up here and adding position, not that you're not going to win, not that markets won't go higher, it just, you're not on sale. That's like going and buying, it's like going and buying a car from the dealership the year that it was, brought out. You're going to pay a premium, and then it's probably going to be devalued over, whatever period of time. So as the market eventually goes through, its correction, it's going to come back down to the mean, and then if we break the mean, we're going to go from the mean to -1, and then we go to -1, the market will then be on sale. And if we go to -2, the market's more on sale. If we go to -3, the market's super on sale. If we go to -4, well, then we're just definitely buying, right? So that's where we're at. We're overvalued in regression and statistics on the market. But just because we're overvalued does not dictate that the market is going to go down right now. We just know that we're getting into oversold areas. So as the markets run up into this +1 standard deviation, we can kind of think to ourselves, or +1, +2, whatever, markets may be a little overbought, blah, blah, blah. So anytime we start to go into sell signals, maybe, it's like that right there. We went into a sell signal the other day. We're bearish while we were in at trading about a +1 standard deviation from the statistical mean. So that's, so yeah, we still use it. It's just not something that I use as frequently anymore. I've kind of learned to place it in my toolbox of strategies a little differently now. And it only comes out when I think it's meant to come out, if you will. So great bounce on the market here, guys. I don't want to say for sure, but there is a good chance we even see this market all the way back up to 6,627. I might be pushing it there, but well, yeah, we should see it even come up here to like 659.14, arguably as high as 660.15. But as we see this market on SPY get towards 658.84, I would be a little optimistic that we're going to see a little resistance, maybe some hesitation. What price did I just say? I don't even remember. What did I just say? 659? What the fuck? What did I say? 659.15? I got so many lines on there I couldn't tell which one I was looking at. Yeah, so 659.19. So not that there's not a lot here, but I'm assuming we're gonna go right up to 659.17 here. If no resistance is found at 659.17, then we're gonna obviously go up more. And if we go up more, I would say the maximum long target for this bounce today is $660.14. I gotta go to the bathroom. I'll be back. Cheers. All right, we're back on, baby. We're back. We are back on, baby. All right, so obviously we've gone up to 659.17. No surprise there. That's actually a decent profit lock location for the trade that we kind of just talked about, the bounce. So if you're still holding some and you have a decent amount on, definitely a good lock spot, and you can hold some. If you only have a smidge left, that's a great lock spot. So I'm going to say, as far as the trend of the market and things that I see, I think being long in this bottom and running it to here is phenomenal, and that's a good profit lock in terms of an intraday tradable environment that we just had. Does not mean that the market won't go higher. Doesn't mean the market's going to crash. Just saying, as far as what we just did, that's a great move. Yeah, so I pretty much trade a little bit of everything. Sometimes I'll do some futures, sometimes I'll do some ETFs. So pretty much a mix of everything. I'll trade some penny stocks here and there. Sometimes some futures. A lot of times UPRO, 3 times leverage ETF on the market. That's what I used for this bounce was the UPRO. Again, futures can be. I tend to not be as good. It's not that I'm not as good. It's just something with futures. I don't know. I just don't trade them as effectively, and I think it's just because of how they move in dollar value. As I've gotten older, I just cannot. I can't handle as much P&L shift as I used to. So I'm just easier with less aggressive trading and less riskier trading now than I used to be. So yeah, anyways, UPRO, 3 times leverage ETF, right? That's something that I can take a position on, watch it kind of move a little bit and, not really feel the panic of being wrong, if you will. So yeah, I'll do some futures here and there. A lot of 3 times leverage ETF, UPRO, that's what I used for this bounce. And then if there's penny stocks on any given day that meet the requirements for me to take a trade, I'll buy some of those. And currently I'm doing a lot of trading in a Roth IRA account, which I was never able to use before because my income was actually too high. And it was just this past 2 years that my income dropped, unfortunately, to levels that I was legally allowed to use a Roth IRA. So I've only started using Roth IRA over... Well, it's not entirely true. When I was growing up, I had a Roth, but then I started making too much money, and then they wouldn't allow me to contribute, and then I couldn't open a new one, and blah, 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 blah. Then my income dropped enough, and then so the past year and a half or 2 years or whatever it was, I opened up a Roth because I could, and then started trading in there because obviously tax deferred and blah, 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 blah. So yeah, again, it's a small Roth account because again I've only been able to open it up over the past 2 years, so you can only contribute so much. So basically doing a lot of trades in a small Roth IRA account, which is again where I'll do the penny stocks and UPRO. So it's fully cash, right? It's a fully cash account Roth IRA that I, will trade a little bit here and there in some of the positions, and so that I can keep actively trading it. So I generally don't max out that account on obviously positions or anything like that, because then you won't be able to trade. So a lot of those positions are going to be 2, 3, 4, 5% of capital on any given trade. That way I can rotate trades throughout the day if I need or see something that I like, and I won't be constrained to the PDT rule on that account specifically. Yeah, I definitely had some burnout, no doubt. Definitely had some burnout. I've had burnout over the years of being online, and running chat rooms and all that. And I mean, it really partially comes from imposter syndrome as well, because we got online and grew pretty quick and created a company behind it, and then traded really good for years, and then kind of hit a stall point where I wasn't trading well and was basically just losing money, unfortunately. And so at that point, it's kind of like you have imposter syndrome. It's like, how do you run a company and you're no longer performing well as a trader? It's like, and it morally doesn't feel right. So kind of slowed down in that. So yeah, it's kind of one of those situations where it's tough to be a trader and run a company, because basically your company is based off the results and how well you're doing as an individual realistically. So if your performance drops, then it's like, well, should I even really be running the company, right? So for the past couple of years, I've kind of toyed with this. It's like, should I even be, the owner of my own company or running my own company anymore because my performance dropped? So makes a very challenging thing, especially emotionally, because that's it. You're torn between doing something you love, though your performance hasn't been good, but then you also have a company that's basically based on you performing well. and then you're not performing well. So then it's like, well, should I even have the company anymore? And that's like, well, everything you've built pretty much your entire adulthood life, you know, swings on the balance of your performance is the way it seems. So I struggled really a lot with that over the past couple of years, unfortunately. So yeah, then it's come. Yeah, so that's pretty much in a nutshell. Obviously, I could talk more on it, but I mean that's pretty much it. So I did. Um, yeah, so that's the majority of it. So as far as like, so yeah, I've battled with some mental health things over the past couple years that I never had before, which is one of which, it's like imposter syndrome. It's like, should you even be in the position you are anymore, and so on and so forth. And so that's kind of the struggle about day trading, investing, and then teaching it, and then owning a business on the side of it, so on and so forth. So that's why over the past couple years I kind of stepped back, not on YouTube or just, well, maybe I guess, but that's why over the past couple years I kind of stepped back, and then I worked with Brandon, who most of you guys probably know, business partner with Boiler Room Trading, Boiler Room Network now. And that's why he's been leading the charge, or kind of the main guy on our private paid for streams. Is because he is a phenomenal trader and has excelled far beyond my wildest dreams of wanting to be a trader, right? So his performance is really is that of the top 1%. So it only makes sense that he would be the guy now running our kind of paid version, and so on and so forth. And that to me was the only thing that kind of felt right to do in that moment in time. It's either kind of dissolve your company of what you've built, or you give give power to the next person in line. For that, it would be Brandon, right? So because of that, his pay is increased through the company, and he's got a little bit of a bigger role, and that's just because of the way things have progressed, and just is what it is. So yeah, that's pretty much the full scope of my life there. And the funny thing is I was gonna say, the funny thing is going through that kind of years of tough trading, which is funny because especially when literally my first year ever trading, I made I think $60,000, and I was like, oh shit, like I got this, which is actually crazy. I don't even know how I did that. Maybe it's 50 grand. It was somewhere in the 50. I think it was 55, but yeah, I don't even know how I did that. Um, But anyways, over the years of not performing well is where I actually learned some of my best edge and strategy, because it was almost unhealthy how much time I was spending looking at charts and analyzing, and it's because it's like the fall from the peak almost. I went from having my best trading to my worst trading, and then it's like you almost go insanity. You're like, what the heck is going on? Why can't I do this right anymore? Why am I struggling so much now? And why aren't my strategies working and all this? And then I found myself sitting in front of stock charts for 15 hours a day up until 2 a.m. studying and revamping edge and strategy and all these things to get back to where I was, and I'm still not even there. And I don't know if I'm ever going to get back to trading the size I was. I probably won't. Trading the size I was, making $50,000 trades, it's just not going to happen. And I just think over those years, my psychology has, it's changed, but it got beaten down so much over those years that it's hard to go back. So anyways, yeah, that's pretty much that. And yeah, but it was funny over those years of trial and tribulation, if you will. That's where I've developed all of these other random strategies that you guys are seeing on the screen now. So it's like I really couldn't present the market the way I can now from the past without basically getting my ass kicked the way I got kicked through like COVID, if you will. So all of the stuff you guys see on the screen is basically built off of me sitting in front of a computer for far too long and far too many late nights. Roberto, I'm not, dude. I really don't know. Brandon says that he says he's got some borderline autism traits. I don't know how much of that's true or not, but it is kind of funny. We always giggle about it, but he contributes it to kind of being able to recognize pattern quicker than the average, which would make sense. But I guess the best way to see he's just a really good trader. That's it. He's an elite trader. That's all it is. So appreciate that, Red. So, oh yeah. So, anyways, that's kind of the trials and tribulations. So, yeah. So it's good, but other than that, I'm doing okay, guys. I'm not. I'm not hurting not hurting too bad. I'm still well fed. No kids. But those are probably coming pretty soon, so that will be an interesting change to the life. But yeah, so I would really stress. I hope no one ever goes through kind of the things in the market I had to go through. But the reality is, most people end up doing it. You're gonna go through your wins, you're gonna go through your losses, etc. Yeah, and that's another thing too, Roberto. Is I've tried. There's things of like Brandon's strategy that I do use. But I don't know it like he knows it, right? He can look at that and just know, right? He's just got his edge there and a little different than mine. But all said and done, yeah, he's got just a keen eye for his systems. But yeah, man, yeah, it actually feels pretty good. Opening up a little bit about that here on the stream with you guys, because yeah, man, that's something I battle with for a long time, and it's like, the only people who really get it are traders. I've talked to Brandon about it too. It's like, it sucks, dude, going from being basically on top of the world, if you will. You wake up and you just kill it every day, and then like one day it doesn't happen, and then it stops happening. You're like, whoa, like that's a huge reality check. And it's basically exactly like you read in stock trading books, if you will, which is kind of the you think you have it, and then all of a sudden it's gone, right? Or traders do well and they hit their cold streak, right? And which kind of falls into the saying. It was a Dave Ramsey video I watched just yesterday. It's like a short. Girl's like, hey, I just made $1 million in the stock market, like 1.7 or whatever it was, through COVID. Friend told me I should be investing. So right before COVID, I started buying all this stuff. So she basically started buying stocks like right on the biggest pump ever, right? And she did really well, made like $1 million or a little more than that. And Dave Ramsey's like, A, that's crazy. But B, the likelihood that you could continue that sort of return over the long run with only, the handful of individual stocks you pick, it's basically not going to happen. So you should sell, lock in, and diversify more, right? So it's just kind of going on to, when I was performing at my peak, if you will, it's like, it seemed like it was untouchable. Nothing could stop me. And then you get stopped, right? And then all of a sudden strategies kind of don't work. So it was kind of a surreal moment that I was experiencing exactly what I had read in, different trading books, right? I'm like, oh, like that's me right now coming from page, 200 of this book. I'm like, wow, that's pretty crazy. Like that's surreal. Al Brooks, you were the one talking about Darvis box, right? Is that what that was? The Darvis box? And maybe we can... Yeah, so yeah, I had so I just had some some years, if you will, of just like basically straight questioning. I'm like, do I continue? Do I not continue? Is this the point where I just walk away from all YouTube, everything? I don't know, right? So I kind of struggle with that for some time. Anyway, let's go look at Bitcoin. Bitcoin, obviously, I don't want to say obviously, but as you guys know, we had mentioned Bitcoin here. 110,750 was one of our desired sell moves. At which point you would look for support. There's your support bounce. All right, so that one's done. Okay. Yeah, as we were saying before, I mean, the market, market's just counter long. There's not a whole lot to say at this point. We've bounced the market. The market's been oversold. We've bounced it. We've taken it back up to really good, desirable, long destinations, for the moment. So this is kind of one of those situations where we're really just sitting back and just probably waiting for, well, I haven't really thought about the next move all that much. More or less just chatting. Al Brooks trades a 5-minute chart. Yeah, that's another thing that I've learned from another individual, which is that if you're gonna be like day long bias, well, just in general, if you're for the market, is another thing I learned from somebody else was 5-minute S&P charts, which is you can be long bias over the 5-minute. Well, how do I say this without sounding stupid? Like short-term trades can only be entered over the 5-minute. I don't know, whatever works, but I know what you're talking about. Yeah, I've learned from another guy where it's like he looks at 5-minute S&P charts and he will only buy long the S&P for a day trade if it's over the 5-minute. So this whole long that we just did off this low he wouldn't be trading that long. But yeah, so we're on that 30-minute VWAP. So let's just double check. Yeah, 30-minute. Let's look at some 1-minute. Let's look at these 1-minute trends. I'm going to delete a lot of this stuff here because I'm just going to clean it up. That's untested. That's untested. We're probably using the volume weighted average price of this move. Okay, so right now the market is using, for whatever reason, that level as the current support to hold. So we know that the breakdown can really only take place if it's going to break down below basically where I'm saying. And then the target, if this breaks down, would be down to here. And then we would look for support off that again. So, yeah, I'm looking at the micro chart right now and kind of how it's set up. So we're hitting a 30-minute, oh, that's not right. We're hitting a 30-minute resistance here, 30-minute VWAP resistance. And that's why I mentioned to lock longs here for myself or whatever, because it's probably decent based off 30-minute VWAP stuff. And if the 30-minute VWAP can roll us down here and start to break, hold on, I'm missing something. We have the breakout VWAP. Yeah, it doesn't look like anything crazy, but essentially these are going to be the two targets on this breakdown here. And then it's going to be to here. Okay. So those are the two desired micro targets for a break of the current volume weighted average price that the market has been supporting on. So you can see we're just supporting right there. So again, we're on support. I don't know if that one's going to hold indefinitely or not. We'll see. And if it does, then whatever. Like I said, these are all supports, right? This is support, support, support. If support breaks, goes to next. If support break, goes to next. Right now, we're still holding that current support right now. And yeah. And this little candle pop back is just testing volume weighted average price from that previous high there. And like I said before, the 10 SMA, that's going to be our final destination, I think, for today. So right now, the 10 SMA is priced at 65987. So essentially one of two things here. If we come up, break 30-minute resistance, then to 10 SMA. If that doesn't happen and we kind of just do whatever, then eventually the 10 SMA price will come down and will meet the price. So essentially either the price is going to break up into the 10 SMA or we're probably going to see the 10 SMA roll down into the price. One of those two fashions, you know, I'm not. So yeah. So I mean, I'll say this. No. I will say most people that are on YouTube um, probably aren't making money trading. Maybe have made money at some point. Maybe some of them are consistent and making money, but not many of them. Like I said myself, I had some great years of great profits all year, and then had years of no profitability. Some of just like break even, and then some small profitability, etc. Right? So, and I'm a perfect example. I'm on YouTube, right? So I've had years of wins, years of losses, etc. So just from my own experience, probably not. Because even for me, and even how much I know, I still lose at times. But yeah, I'd say probably not. I mean, the statistics don't lie. And when I say the statistics don't lie, the statistics caught up with me eventually, which is that, like I said, you know, had good years and then bad. And then it's like, oh, I see. I see how those statistics come into reality is even when you've been performing well, it can still change. So yeah, I'd say most don't. And most do make money from YouTube in some fashion or another. I mean, heck, my first YouTube channel made like $300,000 from YouTube, right? So it's like I made a bunch of money from YouTube alone, right? My highest grossing trading year ever was 250 grand. So essentially, I made more money over the course of YouTube than I ever did in my highest grossing year trading, right? So, so yeah, I know. And then you know, if you add in the different scripts and standard deviation stuff that we sold, that all made money, right? So. So yeah, I know that anyone on YouTube selling a course or whatever, or just being on YouTube, they're making money from YouTube. Do they make money from trading? Probably have, whether it was over the course of a year, a couple months, maybe had a good couple year stretch like I did. But ultimately at the end of the day, it's going to be hard for me and or for them to continue performing at that elite level for an extended period of time. Now if they do, they would be of the 1%, which I consider the 1% currently right now my business partner Brandon. I would fall probably in the majority of investors and traders. Well, debatable. Roth IRA is up 35% this year. So currently, my little small Roth account that I'm trading, I am currently beating almost every hedge fund to date and mutual fund. So that's okay. Like, that's cool. But yeah. Then again, again, I can't speak on half of everyone. I don't know for sure, but again, just taking into consideration statistics, looking at my own personal experience, and then being on YouTube, and making money from YouTube, and then made money from a course of the things that I was doing that was making money, along with different scripts and programs we created for Thinkorswim, etc. I mean, I understand how the online influencing game goes, and then I've traded for however long now, almost 10 years. So, well, 20, yeah, 10 years, heck, almost 11. Wait, holy shit. Yeah. So anyways, I've seen both sides of it, and I've traded enough of, futures, options, equities, penny stocks, shorted penny stocks, that I've got a pretty good scope of the industry, right? And now I kind of see the industry for, what more of, just learn more about the industry. You see more about, what it is. So you just sit. I do still have a rental property on. It's not on the lake. It's in the lake community, but it's one street off. I still have that's currently rented out. I have a property in Ann Arbor that's been rented on and off that we've remodeled that we're trying to sell that isn't really going through because I kind of missed the time for selling, which I kind of knew. So I might go back to renting that one. And then the house that I'm currently in is going to become a rental. We're kind of working at acquiring a new spot to make this a rental, but that hasn't quite happened. So yeah, I'm hoping within, I don't know, maybe the next 4 or 5 years, I'll have at least $4,000 to $5,000 of cash flow a month from rentals. So that would be cool. So arguably trying to retire. When I say retire, meaning just like have cash flow coming with basically not never doing, but doing, passive income enough that if I wanted to, I could theoretically retire, but not with kids. They're too expensive. But for myself and, whatnot, if I wanted to, worst case scenario, my wife ends up thinking one day I turned into an ugly monster and she wants to get rid of me, that I can at least go and live on my own and, wouldn't even matter. Yeah, how are they showing their large winnings? Well, it guess it depends. Either they're making a large win, right? Either they're actually, hitting a big win, or they're using a paper trading account to show a big win, or a lot of them would be using a prop account or a prop firm, which is still really just a demo account, where, you don't have to spend a lot of money to get a lot of fake money to trade with. Therefore, you can put on a big position. And then if you win, you win. So that's another thing. And a lot of times for demo accounts and demo platforms, not all the time, like but if accounts end in like exactly 0.00, which isn't entirely true, some brokers do it in 0.00, some don't, so that's like another thing that I pay attention to, but that one isn't entirely legit. There are plenty of brokers that end their profits in 0.00 that are real profits, and then there's some that do that in demo. But anyway, so I don't know, dude. Again, that's none of my, I guess I'm not really, up to speed on every other platform out there. Well, most of my worst years came through like the COVID years, basically because I was a penny stock shorter during that time phase mainly, and obviously during COVID and GMC and everything, they all hyped up pretty much every stock to unbelievable numbers. So me having the logical brain that I do was like, oh yeah, this doesn't make any sense. These guys are idiots. Well, it looks like I was the idiot. So yeah, so it's just being a bearish short seller during a period of exuberant long buying to prices of astronomically make 0 sense. So it's pretty much what did it. And so then my standard deviation system strategy that I was using to make a killing went out the door, and then I took huge losses. And after taking huge losses, then it's just hard to battle back after such a draining draining event. The Bitcoin bounce is working pretty well. They might even be making a bull flag off of this. Not that I look for patterns and think that that's something that you should use, because I didn't use a bull flag, I didn't use a bear flag, I didn't use a head and shoulders pattern, a broadening wedge, a inverse cup and handle, anything to identify the market should go to here, and then it should bounce there. Zero pattern. But after hitting a really good support, I noticed the market is going up. And then also we're forming what might be a bull flag off of support. Does the bull flag work? I don't know, and I don't really care, but it might. What I cared about was the market going to here and bouncing. Now, what the market wants to do on the way up and whatever pattern, finagly thing it wants to create or make you think it created, I have no idea. But it is fun to kind of look at some of that stuff from time to time. Yep, Semper. Yeah, I know Semper. Semper's in our group. Semper has been in our group for many, many years. You know, from my experience and seeing him in chat, he is of the more consistent traders. He's been with us for many, many years. Pretty much everyone in our chat room these days has been with us either since the start of Boiler Room Trading for 5 or 6 years. We really don't, I was going to say, we usually don't get many new traders. Most of our clientele base have been with us for a long time. Yeah. But yeah, see, like, you know, even with our YouTube stream here, I mean, to be completely honest with you guys, the main objective of this stream is, you know, to come here every day, have some fun, share some strategy, maybe make a trade or two here and there, and hopefully grow the channel, right? I have skepticism about that, and, you know, so, but I'm going to try to be here every single day for a long period of time, post good content, and, you know, for the foreseeable future. If the system just doesn't allow us to grow, I'll probably end up stopping, right? Because I won't spend my entire days here every single day for, you know, I don't want to say nothing. But, you know, if I'm not going to be given a fair shake, then eventually we won't, you know, just stop operating a YouTube stream again. But figured it was worth giving it one more shot to hopefully kind of regrow at least the YouTube and the community here online and so on and so forth. But again, there's some good skepticism there. I have a private group, but, you know, really, like I said before, I think my heart kind of sits in doing things for free now. Because again, I've charged before, and I've had great years of great success, like I said. But, you know, after having some losing streaks and having some unprofitability there, it just doesn't sit right with me to, you know, necessarily charge. So my objective is really just to kind of give all the things that I know for free these days. And if anybody wants to pay, they can be in the private room with my business partner, Brandon, who is extremely, extremely consistent. So my objective is to kind of be the face of the marketing and the free now and pretty much provide all of the information and things I've learned for the years for free. And then obviously if somebody wants to pay, they can do that. And they'll probably be more hands-on working with my business partner, Brandon. And then, yeah, just again, operating a free news-oriented market broadcast just like we're doing. I don't know. I was gonna say. I mean, I feel like, yeah, it does. SLL. I think you email. If you emailed me, I'll just. Oh, I guess I can get a freaking. Just take 2 seconds to get a link. Here you go. Here you go. There's the link to our website. But yeah, so again, really just mainly trying to be here, you know, and just really do it for free. Do it mainly do it for the people at this point. You know, so you know, to be honest, you know, I look at some other YouTube streams on YouTube, and you know, they're big streams, and I think that's awesome. I really enjoy being on YouTube. There's a more of a casual aspect to YouTube than a private one that I like a little bit. You know, and honestly, I think if, you know, if we're able to provide something like that, we say, hey guys, you know, markets can probably trade to here, and then there's probably going to be a bounce on Bitcoin right here, and sure enough, it happens, right? That's the kind of information I think is valuable, but would be important for the public to be able to see, maybe participate on, and then also learn from. So I think the more people that are able to see that and learn from that is it's a good thing. That's a good thing for society, a good thing for the public. You know, so we'll see if the old system will allow. Cheers, cheers, my friend. Cheers, brother. Again, guys, Bitcoin, or not Bitcoin, sorry, the stock market, again, 30-minute VWAP resistance pulling back into desired micro trend targets. So that sort of trade idea and analysis is now complete. Cheers. And that is arguably how you do foresight analysis. Is you figure out key levels and know that something should happen, I guess. I don't know. So this is now going to be the support over under. So this is a scalpable long area, in theory, right? So we'll see if this support holds, and if not, then we'll just readjust. So right now we need to start anchors off this high, because we know that when and if the market does in fact bounce here off this support and sell target, then we're going to target back to the volume weighted average price that was created from the last leg down, which this one, it's got a couple different break spots, so I'm pretty much going with a scalpable long target to this box here. Anywhere from the red box on the bottom to the start and the high of the red box on the top would be the target of this scalp zone, right? So into sell target, support, bounce back to, that would be T1. If above here, this is T3, and then, or T2, T3. So that's how that would be set up. The two blue lines, those are volume weighted average prices. Oh yeah, by the way, guys, I forgot to mention that this volume weighted average price that is coming down is now the resistance. So this is the break. And then anything that pops back into here, if resistance is found, we are then lower high. And the breakdown, if this is to come, happens below that trend. So we could already be doing it right here with just that micro back test. Okay. And if we do end up breaking that down, then we'll most likely transition to our 5-minute levels, which would be down to here. So if the market does in fact break down through the 1-minute volume weighted average price zone, we will then be targeting down into $657.71 to $657.48. So essentially, this red box now on the bottom is the target. So these two are the targets, there and there. All right, 5-minute breakdown sell target is complete. Ding, 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 ding. CNBC's live stream would probably break if they put me on live. Alrighty, ladies and gentlemen, this could actually be going for a 30-minute reset. And if it's doing a 30-minute reset, that means this lower high is going to come all the way back down to here. So that's going to be that target I just put on the bottom. That's like our maximum sell target for this swing leg. If the market does in fact continue down to the price of 65648 to 656, I would call this a 30-minute VWAP resistance trade to 30-minute VWAP support over under. So this zone down here, this is the 30-minute VWAP support over under. Max sell target from previous 30-minute resistance / high of day. So really what you've seen so far, to make it simple, is you've really just seen the market hit a support, bounce up to a resistance, find resistance, and then roll down and go down to 1 minute and 5-minute trend. Right? The 15-minute trend is like right here, and then the 30-minute is down here. So again, this is just bounce up to resistance, 30-minute holds resistance, and then works the market back down to those shorter term trends, one of which being the 1 minute, then the 5-minute, and then down here would be 15, and down here would be 30. And as the market rolls down to each one of those trends can hold its own support. So right now we're basically doing a 5-minute support potential hold or whatever, you know, in that 5-minute zone. But anyways, so yeah, that's that. But yeah, since we are in a macro bearish environment, I mean, it's more likely that we can still kind of continue selling down. And I say that 30-minute VWAP support over under, it could arguably be on deck. Yeah, I mean, as long as the structure stays down and doesn't obviously reverse into some uptrend, that's going to be a target. We should be anchored to the last 1 minute high. So we're going to move these anchors to here. And now our back test zone out of this 5-minute is now here. So pretty much anything below here can still be resistance down. Okay. All right, there's our counter pop back into said levels because obviously, you know, why would it not? All right, again, there's the bounce out of the 5-minute support over under, backtracking most recent 1-minute micro trends. Again, if no resistance is found in the 1-minute trend, then you're just going to go up to this red box on the high side. So now we've broken there and price goes to red box there. Cheers. Arguably the 5-minute too. So then the max bounce here is going to be back up towards the 5-minute. So if we end up breaching this 1 minute, which is where we're at, then we're going to go to the 5-minute, which is the next box up. All right, so we're done with that one. Now this has got to go to the previous low. Nope. Do, 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 do. Yeah, my bad. I was just on a phone call there. Yeah, so. The volatility index, actually, I forgot about that. Yeah, so here's something that we're following that I guess I haven't talked about for a hot minute, which is the VIX. The volatility index. So check this out. This is kind of cool. It's a good learning. So yes. Wait a second. Why does this look weird? It just doesn't seem right, but it is. Huh. All right. So pretty much this is what's going on. The volatility index just started giving up its 15-minute trend. We'll see how that ends up working, but essentially the 15-minute trend is the earliest trend that we look at to decide that maybe the VIX would be kind of entering a downtrend, if you will. So this could be good for the market is what I'm getting at. Yeah, it might be too soon to tell, though. It's still... Basically, all I'm getting at is this is the 15-minute trend. If the 15-minute breaks down and accepts its breakdown, then we're going to look for the market to move down to the 30-minute. And if it moves down to the 30-minute, that's going to give more fuel for the market to continue long. So this is a situation where, again, we have the market, right? We know the market is in a, downtrend. It's in a bearish move. We know that the market can flip back to long bias when we get over the 50 SMA, but we're very far from doing that. So there's and so this is kind of it, is that whenever the market goes down, obviously the VIX goes up. Now we will use the 15-minute and the 30-minute trend. So if the VIX breaks down this 15-minute, that's kind of a short-term momentum signal for the market to continue up. And the breakdown of the 15-minute normally goes to the 30-minute. So, we can look at the VIX's 15-minute and we can look at the VIX's 30-minute. And if the VIX starts to break down the 15-minute, that means the VIX is entering a 15-minute downtrend. Therefore, we're going to look to kind of continue holding the market up. If tomorrow or whatnot, the VIX breaks down the 30-minute, we'll use that to continue bouncing the market. So I guess really what I'm trying to emphasize is that we can use the VIX and the levels on the VIX to dictate being long in a downtrend on the market, right? When the market's in a downtrend and it's going down and it's not in an uptrend, we can look to the secondary market on the volatility index and go, are there any downtrends that are starting right now on the VIX that would then give us conviction to keep buying the market up long while it's in a downtrend? So you can use the downtrend starts on the VIX to be long bias in a bearish environment on the market, right? But that's not necessarily kind of taking place for the moment, it looks. Bitcoin still pretty much not doing anything too crazy. Just kind of going to the old. I don't know. It's on the screen. Once we break down, next likely selling target, and so on and so forth. And again, you can see like our next sell target is just this previous low. We did not get this sell target by just looking left and going, oh, we bounced there, so obviously if this breaks down, nah. We're using weekly volume weighted average prices and things like that. So anyways, that is again our current down destination with our next breakdown. VIX 30-minute looks bearish. No. The VIX 30-minute, wait, where'd it go? That's not it. Different chart. VIX 30-minute. Here we are. The VIX 30-minute is right here. So you can see the VIX is still positive, right? I mean, though the price action might look like, well, yeah, like the 30-minute is trading bearish, sure. But the actual trend is still positive. So I only consider the VIX to be bearish trend when it's, in this case, below $16.34. And I will zoom out a little bit just to kind of emphasize that. There's a lot of moving averages on the screen. I'm going to clean this up and just use a different one real quick. We're going to go to a more simple chart like this. All right, so you can see here, right? So when VIX is below SMA, down. When it's above, up. Below, down. Above, well, below, down. Above, up. Below, down. Below, down. Above, up. Below, down. Down, up. So right now we're above. But if we look at the 15-minute, what happened to the 15? If we go into a 15-minute, we will see that the 15-minute is maybe starting down, right? So if we zoom in on the 15-minute, we'll do the same thing, okay? And let me delete old drawings, okay, boom. So ready? When the 15 minutes below, down, 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 etc. We are coming into the 15-minute. I'm trying to get over there now. It's taking a bit. There we go. So now when we look at the 15-minute, so 15-minute down, what's going on? The 15 minutes just starting to break it. Does it mean it's going to go down for sure? No, but we are starting to get below it. So now that we're starting to get below it, we say to ourselves, anything below the price of 16.75 on the 15-minute is bearish. And if successful, that means we will take the 15-minute market down to the 30-minute. So if the 15-minute does in fact break down, we go to here, to the 30-minute, which would be the next time frame uptrend that we see is of importance, right? So we have an early precursor on the 15-minute, arguably suggesting down. If it does break down, we should trade towards the 30-minute. As a result, the VIX will go down. And as a result, what will happen on the market? The market would most likely continue getting bought into along with the VIX going down kind of thing. Actually, well, I want to say that's entirely true because the VIX 15 minutes a little soon. We usually like the 30-minute, right? If the 30-minute breaks down, then the market's for sure going up. It's when, but yeah, anyway, so that might be a little more detail than you actually need, but anyways. The stock market is still in a macro bearish environment, and the volatility index has not broken down enough levels that would convince us to be extremely a long bias other than just a bounce for now. Exactly, SLL. The 50 SMA system you keep seeing me talk about, it's literally just a bunch of gears, from like a transmission, from smaller to bigger gears, and they all kind of work together. When the smaller gear breaks down, it goes to the bigger gear. If the bigger gear holds, it bounces, goes back to the smaller, so on and so forth. So the way that it, I look at it is the 50 SMA dictates uptrends, downtrends. So no matter what time frame you're looking at, the 50 SMA will dictate uptrend, downtrend within that specific time frame, right? So if you go to a 1 year and the 1 year is positive, then you go to a daily, the daily is positive, then you go to a 4 hour, 4 hours positive, then you go to a 30-minute, 30 minutes positive, but then you look at a 15-minute and the 15 minutes breaking down. Well, if the 15 minutes breaking down, what was previous to that? A 30-minute. So if the 15-minute uptrend goes into a downtrend, that means the market will downtrend until what? Till its next uptrend. What's the next uptrend? The 30-minute. If the 30-minute uptrend holds, then great. If the 30-minute uptrend doesn't hold, where does it go? To the next uptrend. Where's the next uptrend? The hour. If the hour doesn't hold, where does the hour go to? The next uptrend. Where's the next uptrend? The 2 hour, the 3 hour, the 4 hour, the daily, the 5, etc. So there's literally multiple uptrends and downtrends taking place on any given time frame. And as one downtrend takes place, it goes down to the next uptrend, right? And any uptrend that holds bounces and backtracks the previous downtrend, right? So for example, if the 15-minute chart goes into a downtrend and the price goes down to the 30-minute, but the 30-minute's still in an uptrend, and then the 30-minute gets supported, and then the 30-minute bounces, what's it going to do? Well, if the price goes up on the 30-minute, and the most recent trend that put it into a downtrend was a 15, then you bounce up to the 15. And I mean, and I can show you that, it's pretty straightforward. Watch, we'll do it. We do this all the time. That's how we come up with a lot of price targets too, is because we know the transition of moving averages. So ready, check this. Here's your 5-day, 15-minute. So ready, where's the 15-minute breakout? Right there. That's where the 15-minute broke out, went into an uptrend. Where does it go? Right? To the 30-minute. There's your 30-minute. See that? It doesn't look like much because that's a gap, but if I throw this on a pre-market chart, watch this. So we'll go to a pre-market chart. Here we are. And we're going to zoom back to that day. Whoa. So, well, see, this isn't a good example because it happened with the gap up. My apologies. I got to go back and do something else. Yeah, so let's see. Where's a different one? Actually, that probably would work for a rejection system. So this would be a 30-minute break. Rejection. Let's look at the 15. 5-day 15. Yeah, there. Wait, yeah, there it is. Okay, so this is it's kind of a decent example, but really all I can say is if you look at this day, look at ready. So market moves up where? So market moves up into the 30-minute, can't hold above, so then it hits the 30-minute, rejects and goes down. So where does it go down to? It goes down to the 15-minute, which would be the uptrend just below it. So like right here, you can see market flips positive to 15, fails to hold the 30-minute, pulls back to where? 15. So it's really just about understanding what moving averages are kind of positioned where and kind of how the markets move in between both of them and so on and so forth. Yeah, you know what? So probably going to end it there. I'm going to kind of clean up, get ready. Again, appreciate you guys tuning in. Make sure to hit the thumbs up button before you leave. Subscribe if you haven't. And then again, we'll definitely need your guys' help to grow the channel, most likely. So I am very appreciative of all the times you come in and view it, like it, if you're subscribed, of course. But then again, of course, the number one thing we always ask is that you make sure to share our YouTube stream in Ricky Gutierrez's chat room. That's all we ask. Thank you guys. We appreciate it. And have a good one.